Good afternoon to members of the Guild Retirement Fund. My name is Catherine Robson and I'm the Chair of Equity Trustees Superannuation Limited, ETSL, the trustee of the fund. On behalf of the Trustee Board and the Senior Management Team, I'd like to welcome you to the Guild Retirement Fund's annual member meeting for the year ended 30 June 2025. I'd like to start by acknowledging the traditional owners of the lands on which we meet today and pay respects to elders past and present. Before we commence the formal part of the proceedings, I'd like to run through a few housekeeping items regarding today's online meeting. We've scheduled a question and answer session as the last item on the agenda. We've already received questions from members and we'll be answering some of those during the meeting. If you have other questions, please submit these during the meeting. To do this, click on the live Q&A button located on the right-hand side of your screen and start typing your question. The answers to all questions raised, along with the minutes of this meeting and the recording, will be available on the Fund's website in the coming weeks. It's important to note, though, that we cannot answer any questions that relate to your personal circumstances in this meeting due to privacy constraints. In this instance, we encourage you to contact the Fund directly. This meeting is being recorded, so if you have any technical issues or you cannot stay for the entire meeting, please note that a full recording will be made available to all members within 4 weeks of this meeting on the Fund's website. And finally, information provided in this meeting is of a general nature only and does not consider your personal circumstances, your objectives, or your financial situation. If you need assistance, you should either contact the Fund or seek advice from a licensed financial advisor. You can also refer to the product disclosure statement and your most recent annual member statement for further product-related information. Please contact the Fund directly should you need a copy of any of these documents. Today's agenda has the meeting scheduled to run for about 45 minutes. In attendance, we have a quorum of our directors from the Trustee Board, along with David Warren, the General Manager of Superannuation Services from Equity Trustees, as well as Megan Brain, the Executive Director of Product and Operations from the Future Group, and Adam Cusio from Deloitte Australia, the Fund's auditor. The agenda for the meeting includes my opening remarks, after which she'll hear from Megan, who'll provide an overview of the Fund and its key achievements, including the Fund's investment performance. David Warren will then cover the Trustees' review of the Fund, including investment market performance and outlook, and the findings of the most recent member outcome assessments. We'll then hear from Simon Shake, the CEO of Future Group, as the sponsor of the Fund, who'll provide insights into the current and future direction of the Fund. The Board, auditor and presenters will then address some members' questions and provide answers. So turning now to my chair remarks. I'd like to start by recognising that 2025 was a challenging year for many, and we remain deeply committed to supporting members to achieve their retirement aspirations and having confidence in a healthy, robust superannuation system. As trustee, our role is to protect your super and ensure that it's managed carefully, responsibly, and with integrity. We're committed to always act in your best interests. Every decision we make is focused on helping you build financial security and confidence for your retirement. With that said, we'd like to share some important updates on supervisory and compliance developments that impact trustees and members across the superannuation industry. Firstly, the Financial Accountability Regime, or FAR, which began in March 2025, strengthens how trustees, directors, and senior executives are held responsible for their actions. It sets clear standards for governance and conduct so that your fund is managed with strong oversight and transparency. This helps ensure decisions are made with care and always with members' interests in mind. Another new prudential standard, called CPS 230, began in July 2025. It focuses on improving how funds manage operational risk and maintain strong business operations. It also strengthens how we manage third-party service providers, helping to keep services reliable and your information safe. This helps your fund continue to operate effectively and protect your information and savings even when challenges occur. I'd now like to move on to the regulatory changes which occurred over the year, beginning with the key rates and thresholds that define our super system. From 1 July 2025, the superannuation guarantee reached 12%, completing the final scheduled step of the program that began several years ago. This means that for salary and wages paid from the 1st of July 2025, employers are required to contribute 12% of ordinary time earnings to super. At the same time, the concessional contribution cap remains at $30,000 and the non-concessional cap is $120,000. The bring forward limit is $360,000 depending on eligibility. The general transfer balance cap also increased to $2 million from the 1st of July 2025. For members starting their first retirement income stream after that date, the personal cap is $2 million. For members already receiving an income stream, proportional indexation applies based on how much of the previous cap had been used. Whilst we don't expect to see the superannuation guarantee increase in coming years, the other figures I've mentioned are adjusted annually to ensure that superannuation limits stay in step with inflation. Further, these measures all contribute to the purpose of superannuation, which was enshrined in legislation in November 2024, to preserve savings to deliver income for a dignified retirement alongside government support in an equitable and sustainable way. One of the most positive social developments in recent years is the introduction of superannuation on government-funded paid parental leave. As of the 1st of July 2025, eligible parents will receive a 12% super contribution paid into their nominated fund. The Australian Taxation Office will pay these contributions as a lump sum after the end of the financial year in which the leave was taken. This initiative helps close the gap in super balances between men and women and supports parents who take time away from work to raise their families. Turning to tax settings for very large balances, the government's original plan was to introduce a 30% tax on earnings associated with balances above $3 million from the 1st of July 2025. However, in October 25, the government announced changes to that approach. The revised proposal would apply to realised earnings rather than unrealised gains and would introduce a tiered rate of 30% for the portion of balances between $3 and $10 million and 40% for balances above $10 million. These thresholds would be indexed and the proposed start date is now the 1st of July 2026. The measure has not yet been legislated and will keep members informed once the law is finalised. Another area of focus this year has been payday super. Currently, most employers pay super contributions quarterly, meaning that employees potentially miss out on super returns in the period between payday and the end of the quarter. Payday super will require employers to contribute to super every pay cycle, with contributions expected to reach funds within just a few days of payday. Legislation was passed in November 2025, and the commencement date is the 1st of July 2026. The ATO has published implementation guidance to help employers and funds prepare. These reforms aim to reduce unpaid super and give employees faster visibility of their contributions. As we look beyond these key figures, the focus is also on helping members move smoothly into retirement. The Retirement Income Covenant, which came into effect in 2022, continues to inform the way trustees support members in retirement. Each fund must maintain a clear strategy to help members balance income, risk, and flexibility in retirement. Our fund continues to refine its retirement income strategy and expand the tools, resources, and advice pathways that help members plan with confidence. In addition to the Retirement Income Covenant, the government's other key area of focus is service standards, after it became to light that a number of large superannuation funds were not meeting community expectations around the timeliness of death benefit and insurance claims. As a result, the government has announced that it will introduce mandatory service standards for APRA-regulated super funds. These standards will set clear expectations around how funds handle key member services, particularly the timely and compassionate processing of death benefits, the fair and efficient handling of insurance claims, and the delivery of clear, respectful, and accessible communication to members and their families. While it may take a number of years before these standards become law, the expectation is clear. Superannuation is more than just an investment vehicle, and members should be able to expect quality service from their fund. At a system level, cybersecurity continues to be a key area of focus across the superannuation sector. Super funds hold sensitive personal and financial information, which makes them a very attractive target for cybercrime. Across the industry, trustees are expected to maintain strong governance, controls, and incident response arrangements to protect member data and assets. Regulators such as APRA and ASIC continue to emphasise the importance of cyber resilience, including system security, third-party risk management, and clear communication with members if an incident does occur. Members also play an important role in protecting their own information by using secure passwords and remaining alert to scams and impersonation attempts. Alongside cybersecurity, artificial intelligence is increasingly being discussed across the financial services industry, including superannuation. At an industry level, AI is generally viewed as a tool that can assist with data analysis, operational efficiency, and member communications when it's used appropriately and responsibly. Regulators have made it clear that the use of AI does not remove trustee accountability, and that decisions affecting members must remain fair, explainable, and compliant with the law. As this area continues to evolve, trustees are expected to apply strong judgment and risk management to any use of advanced technology. It's important to recognise the broader picture of consolidation and growth across the industry. As of June 2025, total Australian superannuation assets reached approximately $4.3 trillion, with around $3 trillion held in APRA-regulated funds, such as this one. The industry continues to merge and consolidate to achieve greater efficiency and scale, which brings benefits for members through reduced costs and improved investment opportunities, while also increasing expectations for governance and service. Before closing, I'd like to remind all members to take the time to regularly review your super. Check your balance, your insurance cover, and your investment settings. If you're planning parental leave, make sure your fund details are up to date. And if you have a high balance or expect to reach one of the thresholds in future, consider how the proposed tax changes might impact you. For personalised guidance, please contact the fund or seek professional financial advice from a licensed financial advisor or tax specialist. This year is about building fairness, improving integrity, and lifting service for members. You benefit from a higher superannuation guarantee, the introduction of super unpaid parental leave, and an evolving retirement system designed to give you confidence and control. Thank you for joining us today. I'll now hand you over to Megan Brain, the Executive Director of Product and Operations from the Future Group, for further information about the fund and its achievements in the 2025 financial year. Thanks, Megan.
Thank you, Catherine. I would like to extend a very warm welcome to our members, and I'd like to start by providing a brief overview of the fund, highlight key achievements, and discuss our perspectives on fund performance in the year to 30th of June 2025. The purpose of the fund is to support members to save for a comfortable retirement by focusing on delivering them a higher balance at retirement. To support this purpose, our goals are to enhance member outcomes and experience, manage risks effectively, meet compliance requirements, and provide operational excellence and maintain fund viability. The fund currently supports over 96,500 members, with total member assets of approximately $3.9 billion, reflecting its scale and maturity in the market. Our membership base is predominantly young and female, with more than 80% of members fitting this profile, which strongly aligns with the industries the fund serves. The fund offers both accumulation and pension products, allowing members to stay with the fund across different life and career stages. The MySuper offering is a lifecycle product which automatically adjusts investment risk as members move through their working life towards retirement. In addition to MySuper, there are 3 choice products available to members, each designed to meet the needs of a specific member segment. Group insurance cover continues to be provided through MetLife, giving members access to death, disability, and income protection benefits as part of their superannuation. Delivering for members is really a partnership between the trustee and Future Group. Guild Super Services, part of the Future Group, acts as the fund promoter, supporting the fund through marketing, member engagement, strategic growth initiatives, and investment management. While we work collaboratively with the trustee, we recognise that the trustee is an independent organisation and acts purely on your behalf to ensure that we provide a quality service at a reasonable price. Now, let me outline some key achievements in the fund for the past year. Guild Retirement Fund delivered double-digit returns for members across multiple options, despite a turbulent year in global financial markets. Our MySuper portfolios achieved strong results, with invested members achieving between 12.6% and 9.6% for the 2025 financial year. Our MySuper Growing Life Stage option delivered performance, placing it in the top 10 MySuper lifecycle products for the financial year as reported by Super Ratings. It's important to note that this is an example of one portfolio of those to choose from within the fund, and you may not be currently invested within this portfolio. Also, it's important for members to recognise that for most investment options, there is a strategy that is set and asset allocation decisions that are made to support the stated return objectives, usually over periods of 3 years or more. The trustee regularly reviews the fund investment strategy to ensure it positions the investment options to meet as best as possible the relevant investment objectives using the appropriate level of risk. The trustee reviews the fund's performance against benchmarks and investigates outcomes as required in line with our investment strategy. It's always sound advice to read your annual statement and annual fund report and seek professional advice about your investments, having regard to your specific objectives and timeframes, and any specific actions that you may wish or not wish to take in respect of your available options. Thank you for joining us today. I will now hand over to David Warren, General Manager of Superannuation Services at Equity Trustees, for the trustees' review of the fund outlook on investment performance and review of member outcomes. Thank you, David.
Thank you, Megan, for the fund update. I would now like to share some comments on the retirement income covenant, the investment market performance and outlook, and report on member outcomes as assessed by the trustee. So starting with the retirement income covenant, this continues to guide how funds support members who are planning and moving into retirement. In June 2025, APRA and ASIC collected data on the retirement phase, and they are now encouraging funds to take faster action to make sure members are well supported as they retire. The covenant requires funds to do a number of things. Firstly, to help members maximise their expected retirement income as they can have the highest possible income throughout their retirement. Secondly, to help members manage risks to the sustainability and stability of their income, including the risk of outliving their savings or changes in the market. And lastly, to provide flexible access to funds so members can choose how and when to use their money during retirement. The introduction of the retirement covenant aims to help funds better understand members' retirement needs. It also helps members plan, prepare, and feel more confident about their retirement. As part of meeting this covenant, your fund has published a retirement income strategy, and we encourage all members to read it and understand how it can support you in preparing for retirement. And over time, the fund will make available further tools, resources, and support to help you identify your retirement needs and know where to find help. This may include educational materials, reminders to review your super at key milestone birthdays, and professional advice for a more detailed plan. Everyone's idea of retirement is different. Living your ideal lifestyle in retirement requires planning. Taking time to plan can make a big difference in helping you feel confident and financially ready for your retirement. So moving on to super returns, and this is a general update on investment performance overall for the superannuation industry. I want to take a moment to remind everyone that superannuation is a long-term investment. For most members, it's an investment that can stretch over 40 years or more, from the time contributions begin to when retirement income is drawn. While it's important to look at what's happened in the markets over the last financial year, because this is, after all, an annual member meeting, the real focus should be on the longer term picture. 1 year is just a small part of your total superannuation journey. Over the 2025 financial year, both global and Australian markets delivered strong results, despite ongoing economic uncertainty and fluctuating investor sentiment. The year highlighted the importance of resilience, diversification, and a long-term approach to investing. So we move on to looking at asset classes. Australian shares returned 13.8% for the year. The result was supported by strength in the resources and energy sectors, which benefited from steady global demand and solid commodity prices. There were periods of volatility early in the year as global growth concerns weighed on sentiment, but confidence improved in the second half, helping to lift overall returns. International shares delivered an 18.6% gain. This was led by the United States global markets, supported by strong corporate earnings in technology and related sectors. Europe experienced more modest results, while emerging markets were mixed due to currency weakness and slower growth in several regions. And these differences across markets highlight the value of maintaining a globally diversified portfolio. The Australian listed property sector returned 13.8% for the year. Industrial property remained a key driver of performance, supported by demand from logistics and e-commerce. Retail property also showed improvement, helped by stabilising consumer spending and easing cost pressures. The sector benefited from both yield compression and stronger rental growth. Australian fixed interest returned 6.8% over the year. The environment remained challenging as interest rates stayed high for most of the period. The Reserve Bank of Australia maintained a firm stance to keep inflation under control. And toward the end of the financial year, expectations of future rate cuts helped support bond prices. And lastly, cash investments provided stable returns of 4.2% for the year. With interest rates at their highest levels in several years, cash continued to play an important role as a defensive and low volatility asset within diversified portfolios. The results across asset classes this year remind us that markets move in cycles. Some sectors will lead while others lag, but together they demonstrate the benefit of diversification. A well-constructed portfolio spreads risk and helps investors stay on track through different market conditions. All investments carry some level of risk. It's important to understand your own risk profile and how much fluctuation you are comfortable with. The trustee continues to provide a broad range of investment options, allowing members to choose the level of risk and return potential that best suits your personal circumstances. Looking at the outlook for returns, so looking ahead, the main forces likely to shape financial markets over the coming year are expected to be inflation, interest rates, economic growth expectations, and geopolitical developments. Domestic monetary policy remains in focus. The Reserve Bank of Australia is walking a careful line between supporting economic activity and keeping inflation under control. Recent remarks and forecasts signal that rate cuts are less likely in 2026, which may dampen the positive catalyst for domestic equities. That said, the global environment is layered with uncertainties. From trade policy frictions, conflict in the Middle East and Eastern Europe, to potential shifts in US domestic and foreign policy, elevated geopolitical risk remains a major wildcard. Investment markets generally dislike uncertainty, and this means we should expect periods of increased volatility and the possibility of muted returns. Moving on to member outcomes. Each year, we complete a member outcomes assessment to provide transparency on how the fund's products are performing and whether they continue to operate in members' best interests. The last assessment was completed at the end of the 2024 financial year, and we are currently finalising the 2025 financial year member outcome assessments for the fund, which will be published in March. The member outcome assessments consider a broad range of product attributes, including investment risk, in fees and costs, insurance claims management, member engagement, scale, and an overall product assessment rating. Using a rating scale, the assessments provide the trustee's perspective on how each product compares with similar products in the market. All current assessments are published on the fund's website to ensure transparency and to support members in understanding their superannuation arrangements. From the trustees' perspective, these assessments enable us to share our views on the sustainability of the fund and the outcomes being achieved for members. And for members, the assessments provide important information to consider in relation to your superannuation savings. In the latest review, the trustee completed 26 assessments across 4 products in the fund. Of these assessments, 23, representing 88%, met trustee tolerances, which is considered a strong result. For those 3 assessments that were outside tolerance, some products did not meet the trustees' benchmarks for investment risk and return. In these cases, the trustee is working closely with Future Group to put appropriate measures in place to restore the products to tolerance and improve outcomes for members. The trustee is currently completing the assessments for the 2025 financial year, and these results will be published in March this year. And based on the outcomes assessed to date, the trustee considers that the fund continues to be suitable for members. Now, I've referred to working closely with Future Group a number of times today, and the reality is that while we play different roles, the partnership between the trustee and Future Group is underpinned by our alignment in serving members and delivering the best possible outcomes for you. So it is important to understand what is planned for the fund. And for a discussion on the future outlook of the fund, I would like to introduce a presentation from Simon Sheikh, the CEO of Future Group.
Afternoon to members of the Guild Super and Childcare Super Funds, and thank you so much for being here today. My name's Simon Sheikh. I'm the CEO and founder of Future Group. At Future Group, we provide fund sponsor and investment management services to superannuation brands, including those that look after part or perhaps all of your superannuation savings. It's great to see you all here, and I really look forward to sharing with you the latest updates on your super, along with our progress and future plans. Before we begin, I too would like to start by acknowledging the traditional owners of the lands on which we meet and pay my respects to their elders, past and present. We've brought together members of the Guild Super and Childcare Super Fund today because both sit within the Guild Retirement Fund. And we're so grateful that you've chosen to trust us with your superannuation savings. The Guild Retirement Fund is here to support the healthcare, community service and early learning sectors and deliver better financial outcomes for you, our members, with a particular focus on the women and families that we often serve. You may or may not recall that at the start of 2024, the Guild Retirement Fund joined Future Group, becoming part of a larger superannuation group that has its sights set firmly on building a future worth retiring into. This also means we've been able to work towards reducing fees and increasing our investment capability given the scale of the back office that we're able to run on your behalf. Future Group focuses on investments that grow your money but also grow a better world. We aim to do this by investing in things like healthcare and clean energy, affordable housing, and initiatives that promote gender equality. Aligning Guild Super and Childcare Super investments towards these values is a gradual process that can't be done overnight, but we're very excited to be embarking on a journey that works towards giving us, our families, and the children in our care a brighter future. And I'm very grateful that your superannuation savings are investing to generate returns for you and the planet. As we'll cover today, we've seen some great returns from your super over the last financial year. To take you through a few of them, our Building Life Stage product delivered 12.58% over the year ending 30 June 2025. Our Growing Life Stage option returned 11.76%, and our Consolidating Life Stage option returned 9.56%. Our Growth Pension option returned 13.29% over the financial year, relevant to anyone in the pension stage. These are some great financial returns supported by strategic decisions that were made across the year. We're extremely proud of these results achieved by the Guild Retirement Fund, and we really look forward to continuing to serve you, our members, and to build towards your retirement and to continue to build towards your trust. We aim to provide services to support you with your retirement, but also to advocate for the things that matter to you and drive positive change in the industries that you work in, as well as the wider society. To touch on the business, Future Group, and what we are in supporting you, We are what's known as a benefit corporation. In 2025, we were really pleased that we've been recertified as a B Corp. This certification means that we've been verified as meeting high standards of social and environmental performance, transparency, and accountability. Our business exists to serve the 415,000 people who are members of one of our funds. We take our responsibility to you very seriously, and I hope that this year we've continued to work on earning your trust. As part of building your retirement savings, we seek high levels of diversification in our underlying investments. We specifically look to investments that can deliver essential services for the community, supporting positive social and environmental outcomes, while seeking to achieve strong risk-adjusted returns for you, our members. Some of these investments, they also benefit from support by various government's programs, as governments seek to crowd in investments and incentivise capital allocators like us to invest in particular areas. I want to turn for a moment to childcare super. We've been strengthening partnerships with childcare sector advocates over the last 12 months. Our support of the early childhood education sector and care sector has progressed through our national and state level partnerships with the Australian Childcare Alliance, for whom we're now the exclusive superannuation partner. We're very grateful to be partnering with the childcare industry, such a critical industry for our nation's future. We're the only super fund to partner with the ACA nationally, which gives us a unique platform to support you and advocate for you, to advocate for the sector, and to provide value-added financial education to help you make the most of your superannuation savings. We've also continued our partnership with the Fraser Foundation. The Fraser Foundation provides financial assistance in the forms of scholarships to aspiring early childhood educators, and we're so pleased to be supporting this important work. I'm sure, like me, you want to see the childcare sector grow with great people supporting our young kids. So far, the Fraser Foundation has provided more than $300,000 in scholarships to remove barriers to entry and get more early childhood educators qualified and get them in to this highly impactful sector. For any childcare workers on the line, for any early educators on the line, we're so grateful for the work you do. And for our members in the pharmacy industry, our relationship with the Pharmacy Guild of Australia continues to thrive. Our team have attended numerous conferences and events during the year where we've met with many members and employer partners. We've answered your questions about super and provided guidance and support where we can. Turning to 2026 and the outlook. Looking to next year, we continue to focus on delivering the best value to you, our members, with a focus on stability and growth now that we're in the new year. As you're no doubt aware, we're living through a period of significant change in the global environment, and we've been living through that period for several years now. For many decades after World War II, the world benefited from a relatively stable global trading system led by the United States, but also alongside various multilateral organisations. And while that system is evolving and power is becoming more widely shared, we're clearly going through a period of rapid change all around the world. These shifts, I know, can create uncertainty, and how long-term investors respond is really critical. At Future Group, our focus is what this means for your retirement savings. Periods of global change can lead to short-term market volatility and economic uncertainty, but they don't change the importance of a long-term investment approach. Importantly, a changing world does not automatically mean a negative outlook in the short term. Global economic growth is still expected to remain positive in 2026. Continued investment in areas such as artificial intelligence, infrastructure, and in particular the energy transition is supporting productivity, and it's creating new opportunities across many economies. But nevertheless, we do continue to monitor risks carefully given the magnitude of the changes occurring in the global economy. In particular, we are watching valuations in parts of the market linked to artificial intelligence, as well as inflation trends and their impact on interest rates. At present, our research indicates that while markets are not cheap, they are supported by strong company earnings and inflation remains broadly under control. Now, history shows that periods of uncertainty often reward investors who stay patient, remain diversified, and keep a long-term focus. So while markets may move up and down, staying invested has been key historically to achieving strong retirement outcomes over time. Now, we remain committed to managing risk thoughtfully and positioning your portfolio to deliver resilience and sustainable outcomes over the long term. I want to take a moment to turn away from member returns and focus on the other benefits that we provide to you. We understand that in accessing your superannuation, the broader offering, the advice we can receive, that you can receive, the support you can get along the way can make a meaningful difference to your retirement. So I want to remind you of some of the features available to help you make the most of your superannuation savings. Firstly, you have access to a team of professional superannuation coaches who you can reach out to via phone call, email, or live chat message service to help you understand and optimize your superannuation. In simple terms, anything you're not sure about or want them to look at, like your investment choice, what investment option you choose, your insurance that you have through your super, how you're tracking towards retirement, these are the type of topics I really encourage you to reach out to our coach team and talk about. And you can find their details on the Guild Super website and the Childcare Super website. Another tool available to you is Super, which helps you grow your super while you shop by rounding up the change from your transactions and depositing it into your superannuation account. Access is already included in your childcare or Guild Super membership, and depending on how much you use it and how much you earn, you could be eligible for a government contribution of up to $500 a year over the top of those round-up contributions that you make. Every dollar helps over the long term because of the nature of compound interest, and we hope you'll consider taking advantage of these types of offerings. Planning for your eventual retirement means looking after yourself as well. We know that life can get tough, and that's why we've got 360 Health, a health and wellbeing program provided at no extra cost to you. It's offered through the funds insurer MetLife, and the 360 Health program offers accessible and personalised care to help you achieve your health and wellness goals. All the services are delivered virtually, connecting you and your family with health professionals like GPs, paediatricians, mental health clinicians, psychologists, psychiatrists, even exercise physiologists, dietitians, and women's health nurses, all from the comfort of your own home. It's really about bringing holistic care to you when you need it most, helping you take charge of your health in the way that works for you. 360 Health is not health insurance. It's not designed for critical or emergency health issues, but it can help save you money by helping you get ahead of medical issues and provides medical and wellbeing support and advice, all included in your superannuation membership, whether you hold insurance in the product or not. And we're very, very pleased to be able to offer members in these products and their families access to this 360 Health platform. That includes your parents, your kids, your partner, even your parents-in-law. It's just another way that we're helping you create a better future for yourself and your family, because after all, that's what superannuation is all about. We're also continuing to develop digital solutions that provide you with online tools and even more information to ensure you've got plenty of support and tips to help you stay on track as we move through 2026. Please keep an eye out. We've got some upcoming video series which will provide members with bite-sized videos to support you in learning about the basics of super so that you can make more informed decisions. I'm sure you'll agree, the more information you have, the better the decisions you can make. We'll continue to update you about these and other developments with our regular newsletters, campaigns, and education webinars to ensure that you get the information you need when you need it. So please keep an eye out in your inbox and inside your app. Looking ahead to the financial year 2026, the rest of this year coming, our focus really does remain on ensuring the ongoing growth and development of the Guild Retirement Fund by helping to create a prosperous future for you, our members, whilst also driving positive impacts for our wider society. We're going to continue working to uplift our member services with a focus on easy to access information, straightforward insurance claims processes, and delivering lower costs to you, our members. Our growth goals for the year are focused on maximising your retirement income. And we're also here to help you make informed choices on how to secure your pathway towards your retirement. We know how important that is for you, and I hope you'll take up some of the offerings that the fund has. We also really appreciate your feedback and will continue to work hard behind the scenes to deliver value and efficiency for you, our members. I really want to thank you for your ongoing commitment to creating a better future for all, and most of all, thank you for your trust as we work really hard to grow your retirement savings.
And thanks, Simon, for sharing that important update on the fund. That's all the formal presentations that we have today. We've now got some time to move into some questions and answers. This is an opportunity to address some of the core questions that we've received from members, covering topics such as speculative investments, cybersecurity, AI, claims management, and how the trustee supports members in these key areas. Please note that we're unable to answer questions that relate to a member's personal account details or circumstances for privacy reasons. Okay, moving to the first question. Does the Shield and First Guardian matters impact our fund? So we understand that reading about situations like Shield and First Guardian can create concerns, but there is no impact to the Guild Retirement Fund, the day-to-day operations of the fund, or the services we provide to you as a trustee of the fund from these matters. We appreciate this situation has been deeply challenging for those affected. We have clear ideas for regulatory reform, and we are working with the key industry bodies and the regulators. We are respectful of the ongoing regulatory examination of the issues, and we remain deeply committed to supporting them to have robust confidence in the superannuation system. The ETSL board is committed to acting in members' best financial interests and takes this compliance obligation seriously. Okay, next question. How is the fund using AI, and how do you protect member data and privacy? Megan, can I ask you to take this one, please?
Thanks, David. Like many organisations, we are exploring the use of AI and advanced analytics to improve efficiency and member experience. For example, by helping us respond to inquiries more quickly or identify patterns that can improve our services. Any use of AI is governed by our existing risk, privacy and security frameworks. We take data protection very seriously. Member information is stored and processed under strict security controls, and we comply with relevant privacy laws and regulatory obligations. We do not sell member data, and any use of AI tools must meet our standards for confidentiality, accuracy, and human oversight. Thanks, David.
Thanks, Meg. Okay, our next question. How does the trustee view speculative investments such as gold, silver, and emerging technology such as AI? And what steps does the trustee take to manage and limit exposure to these types of investments? Good question. The trustee recognises that assets often described as speculative, such as certain commodities or emerging technology-related investments, can play a role within diversified portfolios, but they also carry higher levels of uncertainty and volatility. These investments can be sensitive to market sentiment, valuation changes, and rapid shifts in economic or regulatory conditions. The trustee has limits on the percentage of a portfolio that can be allocated to a single investment or asset class in order to provide some measure of protection. However, true protection comes from a properly constructed and diversified portfolio. Members are encouraged to consider their individual time horizon, risk tolerance, and retirement goals when choosing investment options, and to seek professional financial advice if they are unsure. Okay, next question. What can members do to improve Guild Super's visibility? Megan, can you take this one, please?
Guild Super's visibility in a workplace often increases when people feel more comfortable talking about super in general and know where to find reliable information. Many members are defaulted into super and may not realise how important engagement can be, so creating space for awareness rather than advice can be helpful. Members can support engagement by encouraging colleagues to make use of official Guild Super information and tools. Pointing people towards the Guild Super website allows them to explore their own super, understand how the default My Super lifecycle option works, and learn about contributions, insurance, and investment choices in their own time and without pressure. Another way members can help improve visibility is by supporting access to education. This might involve suggesting to an employer or a HR team that super education sessions, webinars, or information from Guild Super be shared with staff. These sessions are designed to provide general information and help members better understand how super works, rather than offering personal advice. Members can also help by ensuring Guild Super communications are visible in the workplace. This could include encouraging employers to share links, updates, or reminders through existing channels such as internal emails, notice boards, staff intranets, so employees know where to go when they want more information. Leading by example can also make a difference. Engaging with your own super, using available tools, and being open about the value of staying informed can help normalise super as an important part of financial wellbeing, while leaving each individual to make their own decisions based on their circumstances. David.
Thanks, Megan. Okay, our final question. What is the trustee doing to ensure that claims are managed and paid efficiently for members? Okay, the trustee places a strong emphasis on the fair, timely, and consistent management of claims. Claims processes are designed to operate in accordance with the relevant trustee, policy terms, and legal and regulatory requirements, while also recognising the importance of clear communication with members throughout the process. The trustee oversees claims governance and works with administrators, insurers, and service providers to support efficient claims assessment and decision-making. Performance and service standards are monitored and processes are reviewed periodically to identify opportunities for improvement. At all times, the trustee acts in the best interests of members. That's all the questions we'll address in the meeting this afternoon. We'll respond to all questions that were raised, including those covered today, and include responses in the minutes of the meeting. We sincerely thank members for their questions. I'd now like to hand back to Catherine for her final remarks and to close the meeting. Thank you, Catherine.
Thanks, David, and thank you for your time and attendance today. We hope that you found the meeting both useful and informative. A video of the meeting minutes, and written responses to all the questions raised will be available on the Fund's website within 4 weeks of the meeting. Thank you, and wishing you a wonderful rest of the afternoon. Goodbye.